Okay, let's move on and let's now welcome on board Keki Mistry from HDFC and take sense of what's happening on the ground right now. Keki, morning. Great to have you on the show. The COVID second wave, Keki, has now peaked. Are you seeing signs of a recovery in economic activity? What are the trends that you're observing on ground? And if at all there were to be a third wave, do you think that's going to again halt business and the economic activity?
All right. So we saw the first time when COVID happened last year that a lot of people were skeptical. People were saying that it would take a very long time for the recovery to come back, and there would be a major problem that people would face, and so on and so forth. And we saw how quickly the economy rebounded. I remember in one of your programs, I think it was in June or July probably, and I had mentioned at that time that in my view, the economic recovery will be a lot faster than what people were expecting, and that's exactly what happened. Now, the risk to that was always the second wave of COVID, which happened, and because of that, you did see a little bit of a slowdown in April and May. But now in June, as you said, things have plateaued out. A number of cases have come down significantly from what the peak was. And we are seeing that day-to-day activity is happening on a continuous basis in most parts of the country. I, for example, have been coming to office every day since June or July of last year. And I've been seeing that the traffic on the road is increasing every day. And now the traffic that I get coming into office is what it used to be, almost what it used to be in pre-COVID times. So things are back to normal. You see everyone, or most people, 99% I would say of the people you see on the road wearing a mask, having some kind of social distancing, practicing some kind of social distancing. But generally, the economy is going to come back on track very, very quickly. We are already seeing that in June, and my sense is that with every passing month, that momentum will only keep accelerating. The only risk that I see to the horizon is the third wave, if there is a third wave, and what impact that third wave would have. Even if you were to look at a sector like hotels, a hotel is probably one of the sectors which one would expect would get very significantly impacted because of COVID. But when you go to a hotel today, you'd see that people are, if you try to book a hotel today, you'll see that almost every hotel is running at full capacity. Particularly the hotels which are, within proximity of the big cities, because people have got pretty fed up staying at home every day, and therefore people are looking at some kind of an outlet to go out somewhere, spend a weekend in a good place, or things like that. So economy will bounce back, I have no doubt about it. Unfortunately, the health crisis in the second wave was very, very significant. But the impact on the economy, to my mind, would be lesser in the second wave than it was in the first wave.
Right. Keki, you pointed out to a very important point about, the impact on health as well as livelihoods. At the industry level, though, are you seeing any impact on collection trends when it comes to your business? And on the other hand, has demand for housing only increased because of the stay-at-home, work-from-home culture? Share with us some of the key customer trends that you've observed.
Right. So first, let's look at two things separately. Let's look at growth and let's look at collections. Obviously, in the short term, some impact may be there on collections. It may not be a very significant impact, but some impact might be there. But going forward, what you must understand that as a housing loan is an extremely secure form of lending, because the individual who's taken a loan has mortgaged their very property where he stays. And people will not do anything which would jeopardize the ownership of the property. That's number one. Number two, in most of our loans, we have co-borrowers. So it's both husband, wife, jointly who've taken a loan. So in the event one of them has some difficulty with their job or salaries or whatever it is, the other person can take on the mantle of servicing the loan. Thirdly, most importantly, our average loan-to-value ratio at origination is extremely low. And all our loans get repaid through equated monthly installments, which starts straight away. And therefore, the actual equity that the individual has in a property is so very high that there would be no chance that he would sort of want to risk losing that property. And there are laws in India where you can, if there is significant default, take possession of the property and auction it. Not that one would do that in most cases, but that threat is always there. So I don't see any impact, any long-term impact on collection. Short-term, 1 month it might be a 1% or 2% higher or lower. That is something one would have to accept. On the growth side, on the other hand, COVID has actually been a little positive for the housing sector. Because what people have realized is that, particularly in the cities, in India, we have this trend where there are 6, 7 people staying in a 1-bedroom or a 2-bedroom apartment, which is 400, 500 square feet. And obviously, if one person in that family gets struck with COVID, then it spreads very quickly to the rest of the family because it's very difficult to do social distancing and you don't have big enough houses to do that. So COVID has made it more imperative, made it more important, more necessary for people to either look for bigger homes, even if this means traveling a little more. So I think the demand for housing would probably get accentuated or increased because of COVID. But structurally, housing in India has always potential to grow very strongly. And we did see that towards the end, after the first wave was over. We saw that in the period January, February, March, particularly in the month of March 2021, our disbursements were so much higher than what they had ever been in HDFC's history. We disbursed more than 16,000 crores of individual housing loans during the month of March. Our previous highs had been less than 13,000. And we saw that trend. We saw that with every passing month from June of 2020, that the amount we were disbursing was higher than what it was in the previous year.
But Keki, first, good morning. Nikunj also joining in. But Keki, do you see that because of the second wave, lives and livelihoods have got impacted? Bottom of the pyramid, in a sense, there are some pockets where saving rates are low, job losses are high. Could that start impacting HFC demand? I mean, there's a natural curve which was there in India because of the gap between housing and affordability. But now, do you see that changing?
For the salaried class, I don't think the impact will be material at all, simply by virtue of the fact that there have not been that many job losses. Even in the first wave, when there was a complete shutdown in the entire country for more than a month, we did not see that many job losses. And in the second wave, the number of job losses has been that much lesser. Yes, unfortunately, people have died in the family, then that obviously has an impact. But other than that, affordability to my mind has only gotten better because interest rates are at an all-time low. I do not see the possibility of interest rates going lower any further, number one. Number two, developers today are in a hurry to try and sell their properties. So if someone was to go to a developer's office and sort of the developer is convinced that he's a genuine customer, he will always give him some kind of a discount or a rebate to try and persuade him to sell the property. So there are various such things which make this probably as one of the best times to look at buying a property. So I think structural demand for housing in India will always be strong because we have a young population. A lot of our population today has not even thought of buying a house, but as they grow older, as people reach the late 30s, that is the time people look to buy a house. And today we have more than 2/3 of our population that is below the age of 35.
Keki, what has been the impact of the second wave on commercial real estate? Do you see commercial real estate impact, especially now that we are working from home, could get impacted?
So what we are observing, our lease rental discounting portfolio, which is about 7 to 8% of our total lending, is generally been only for big to large office complexes. And these office complexes are largely occupied by multinational or very large companies. We have not seen any significant impact in terms of collection or in terms of properties being vacant. Yes, if a property is vacant, some degree of properties might be vacant, but very, very small part. And collection efficiency on the lease rental discounting portfolio, Rajpur, has also been very good. But yes, if someone has financed things like malls and public places and stuff like that, then there might be an impact. But we fortunately have not done it.
Mr. Mistry, morning. Now, you mentioned that you don't see the possibility of interest rates going any lower. The RBI has already given their stance of accommodative as long as necessary, and we are seeing the rising inflation risks, and globally as well, the Fed is expected to hike interest rates sooner rather than later. What is your outlook as to when you see the Reserve Bank hiking rates?
Well, first, you have to understand one thing, that we are all going by the assumption that there will be no third wave. If theoretically there is a third wave X number of months down the line, then to my mind, RBI is unlikely to look at raising rates, because it is very critical for the economy to get back to normal times, and therefore RBI will like to keep interest rates as low as possible. Inflation in India would largely stem, to my mind, out of imported inflation, because oil prices have gone higher, things like that. If we, on one side, we say that the growth has got impacted because of COVID, if growth has been impacted generally in the economy, if growth has been impacted because of COVID, then it is all the more imperative to keep interest rates low. So at least in the envisageable 6 months or so, at least 4 to 6 months, I don't see interest rate hikes in India. And if there is a third wave, unfortunately, I hope to God it's not, but unfortunately, if there is a third wave, that 4 to 6 months can be a lot.
The financial industry is set to change as well. We're seeing a rise in technology adoption, the number of different tech players. There's PSU bank consolidation as well that's underway. A lot of large NBFCs seem to be becoming rather aggressive. Amidst this scenario, how are you looking at the housing finance industry evolving over the next 3 to 5 years?
So people have become more digitally savvy. People have become more used to automation, because COVID has induced almost anyone to, if you during COVID time you had to buy anything, you had to make payments online. So people have become more digitally savvy during this period. So if someone is looking for a car loan or a consumer loan, it is very easy to do it online. It's very easy to do it through one of these players. But what you need to understand is the housing loan is a little different, because it is a loan taken for a property where the individual is going to go and occupy. He's going to go and stay. He wants to be 100% sure that the property he's buying is right, the developer is good, he will complete the project, the titles are in place, the construction is as per a certain quality, and things like that. And for that, a lot of people have faith in HDFC's ability to sort of do a due diligence on the developer to make sure that these parameters are met. So I think for a housing loan, people will still not want to do a transaction off the net. They would much rather come to you, talk to you, understand the finances, understand more details about the property and buy it. So I don't see any major disruption in the housing finance sector. You could, however, see that in other consumer products where a customer is only looking for a loan as quickly as possible. In a housing loan, speed, though important, always important, is not as critical as being sure that the property is right and that the construction is as per plan and so on.
Mr. Mistry, thanks very much for sharing with us your outlook. It's time to slip into a very quick break right here on the show. Be right back.